Alrighty, guys. So first one we're going to react to here, Ron Barron speaking about Tesla stock extensively. He went on CNBC a few hours ago, and he really went in about Tesla and kind of where he sees the stock going. He makes some pretty big arguments so that the stock has already bottomed and we're heading up from here. So I want to react to all that.
Sold a few years ago. When you sold that stake, you did it because you were worried about the portfolio being too heavily invested in one particular stock.
It's gone up 20 times, yes.
Yeah, and it's gone up 20 times. Do you hit that point again? Do you have to trim more just because you now have $3 billion? What'd you say, $4 billion? I've got $3 billion.
Yeah.
At $3 billion as of 3/31 today. It must be $4 billion?
It's around, I don't know, it's around $3.5–4 billion, something like that.
But the reason that you gave in the past wasn't that you didn't believe in it.
It was just too big of an investment.
It was just too big of an investment.
Yes.
So you hit that point again.
Yes, yes. Well, at some point, maybe. But I think SpaceX is going to be, I think we're going to make 20 times in SpaceX over the next 15 years. I think we're going to make a quadruple in the next 6 or 7. Can it be too big? Sure. So I'm always watching.
Just because you're managing other people's money.
But I do think that we're going to get a lot more money to manage, so therefore it's going to get diluted down by the new money coming in. Always thinking about how large the position should be. Yes, but
so what do you think right now? The stock came out. The earnings this week came out. It was a disappointment for the quarter. It was the worst cash flow quarter that the company's seen in its history, but the stock was up 12% because Elon started talking about what he sees in the future and the idea of bringing out cheaper cars to go through these things. Where do you stand on what the company should be valued?
So I know Joe's not a big believer in electric cars because he likes his Porsche. But I think all the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so the automobile companies don't have to lose money on the electric cars. But the electric cars, I think, is going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. So it's going to be all electric. And so what I think is going to happen is that the reason the stock is down is not because of the quarter. The reason the stock is down...
Well, the stock's up because of the stuff that he said.
Well, the stock's down so much.
Well, it's down 35% year to date. It's down 1%, or it's up 1% over the course of the last year.
Yeah, it's not so exciting to be up 1% in a year when everything is, the market is so strong. So, I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason stock is down. And then...
No, Ron Barron, in all due respect, as a fellow Tesla bull, I got to push back on you here. No. The stock is down because Tesla's numbers have obviously fallen apart over the last 2 years. That's why the stock is down. Okay, let's be very clear about that. We expect Tesla to always grow at a very rapid clip. When the revenues are going down, especially automotive revenues down substantially, earnings per share down 50+%, net income down 50+%. That's why the stock is down. Let's not fool ourselves and try to make it out to be something it's not. That's why, okay? If Tesla was still growing 50% or even 30% and growing net income, believe me, the stock would not be down like anywhere remotely close, even if people thought they had canceled cheaper cars. Like, no.
And there was a report in Reuters said he's canceling this new factory that's going to make robo-cars, that's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company that makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting.
$4 billion
I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies cost them $5,000. We can make a motor for $1,000. Costs $5,000. So they get.
Yeah, but then you have to have a battery that's more expensive.
Oh no, I'm talking about if you're making the internal combustion engine cars. I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated. That they don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched and they do things without trying to make things better and cheaper and faster all the time. There's no incentive to do that. So Munger says, "Show me the incentives, and I'll show you how people act." And that's the idea, that people, the incentive, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that that's the reason stock's down. And now
So what's the reason it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
And so.
Wow, that's a big statement right there. Now's the bottom. So, do I agree that the stock has bottomed out here? Here's what I'll say, okay? I believe it has bottomed if we don't have any sort of substantial recession coming in the next year or two. Then 100% I believe we bottomed and we're only going up from here. If we are in some sort of situation where we get into, let's say all of a sudden a big recession hit, we got a lot of job losses over the next year or something like that. The economy could get hit worse, the stock market could get hit much worse, right? In that sort of situation, maybe we go back down to the $100 level that we had last seen at the end of 2022, beginning of 2023, right? So I think that's what it really comes down to. Now, if the economy just gets a little better over the next year or two, 100%, I believe we bottomed this baby out. But that's the big question. What happens with the economy, right? Because we are we're in a funny place with the economy where interest rates have been elevated dramatically. They've been elevated for quite some time. Fed lags eventually catch up, and does that eventually cause a big job-related recession, right? And we'll get into more of that, obviously, in the Jamie Dimon video.
What they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to. But overall, until they expect to do 5 million of these new cars.
Can I ask you a robo-taxi question? Because that is, I think, the future of this company,
yes.
And a lot of the value is reliant on that. Mm-hmm. The question is what you think the genuine timing of a robo-taxi that's reliant on cameras only, and this has always been the question about can you do it with just cameras relative to what Waymo and Cruise have done. And there's been
I feel like this gentleman asks that question to literally every single person that comes on and talks Tesla.
Questions
Same
about
exact
that,
question.
using the radar and the LiDAR and the whole rig that lives on those vehicles.
Well, we have a small investment in Cruise because I wanted to see what they're doing. And Waymo is, their cars are $250,000.
Because of all of the sensors and all of
and they're trying to take cost out. And for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every 90 days.
I don't disagree with you. The question is a timing question of how quickly you can actually put these things into the wild.
I was just in California. Last Sunday, I was in Vail, because I want to see what they're doing with AI and the mountain and capital spending. And then that was on Sunday. And then on Monday, I was in SpaceX in LA in the morning with some engineers and some finance people. In the afternoon, I went to Tesla, and I was with the autonomous driving people and also the compute people. And then afterwards, they said to me, Ron, would you like to see how we've made unbelievable advances? The first 11 versions had to be designed so that they had to code every single thing that happened.
Right, and now it's all AI.
It was impossible. And so therefore, they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12. They have all this enormous amounts of data, and now they have compute to figure out, humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So I said, okay, show me. So we do the couple, 3 hours. And then before I'm going to go back to New York, I say, okay, so I want to see how it works. So we go into a parking lot, and we get into the car, and I have an analyst with me, and then they had the compute person, and they had an investor person. And so we're sitting in the car, and so where do you want to go? I said, I want to see Steve Jobs' house. And so, okay, so they punch in the address, cool. And we get into the car drives around by itself. Didn't do it, all we did is punch it in. Drive around the parking lot, goes to the road, there's traffic going both ways. It looks both ways, looking for an entry to get in, gets an entry, pulls in, makes a left-hand turn, drives right behind cars in front of us. There's a stop sign, first car stops, goes, second car stops, goes. We pull up the stop sign, car looks both directions, makes a right-hand turn. Just drives. And then all of a sudden there's a pedestrian crossing the street. The car stops to let the pedestrian cross the street. The pedestrian, I don't know if it's being set up on this, but the pedestrian waves, and then the car starts.
Can you imagine that publicity story? Robotaxi just rams right through a person. Ron Barron's in the car. They're taking pictures. Look at Ron Barron hit somebody.
Again. Then it pulls up, then it makes a left-hand turn, and then goes in front of Steve Jobs' house. It's a nice house. It was just a house, though. I was expecting a house, but it was a house. And so stopped in front of Steve Jobs' house. Then he has that house, and he doesn't, his wife does, the house next door. Then they had looks like 3/4 of an acre for sale next door for $15 million. You're
going to buy that, aren't you, Ron?
But it drove all by itself. Yeah, all drove by.
Take me to stalk somebody's house.
It drove all by itself. So what's going to happen is that I thought the idea had been that you're going to sell a lot of cars. So as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
That's the long-term thing. If Tesla's everywhere, just like the Tesla charging.
If they're making cars, they make $7,000 in profit a car for a car they're selling for $35,000, minus the $7,500 credit.
What's your timing? But just give me the timing. That's the whole game.
Now.
Now?
It's now.
So, very, very intriguing. Let me finish out with those thoughts on Tesla, then we'll get to his thoughts on being a long-term investor, and then Jamie Dimon on the economy. So, when he says now, it's happening now in terms of like you experience a car and it's just unbelievable. I've tested out several times now, and the technology is incredible, absolutely incredible. And we're almost there, but we're still not there. And so when he says now, it's like, it's all happening now, and this is very exciting, but we got to finish the project, right? Is the car as good of a human driver? I can't say it's as good. I think it's better than some drivers. I'll be honest with you guys. I think it's better, safer than some drivers. Can I say it's better than the majority of drivers? Not yet. Can I see it getting there in the next 6 to 12 months with the way the AI chips are working and how fast things are progressing now at this point in time? Yeah, I could actually see within 6 to 12 months it being better than the majority of drivers. The last step is getting better than all drivers, right? Then we're really, really talking at that point in time. So, alrighty, folks. So let's get into what happened here. Elon Musk, the bombshells, and all those sorts of things, okay? First place I want to start here in this story, okay? And by the way, cheers. Cheers to everybody out there. I'm drinking a glass of water. That's how you know it's been a long day when I'm not even drinking flavored something, right? So this was Tesla's horrible disaster quarter. This is what all the experts have called it, all the Wall Streeters. This is like, so embarrassing for the company to put up and those sorts of things, right? And by Tesla standards, it's really bad. But the thing I think is fascinating, right, is a company in this disaster, horrible, awful, embarrassing quarter still made $1.1 billion in GAAP net income, generally accepted accounting principles. That's insane. On a non-GAAP basis, they still brought in $1.5 billion of net income. That's extraordinary for a company who has a horrible, disaster, embarrassing quarter, right? Now, I show you that because I want to show you what it looks like when other auto manufacturers have a horrible disaster quarter. Here's what happens to others, okay? Look at General Mills. It's been a long day. General Motors, for instance, right? General Motors, if you look at when they have a bad quarter, they don't make money. They lose money A lot of money. For instance, this quarter was a bad, disastrous quarter for GM. They lost $806 million on their bottom line. This was a bad quarter for the company. They lost $232 million on the bottom line. This was a really bad quarter for them. They lost over $5 billion on the bottom line. This was a disaster quarter for them. They lost over $2.9 billion on the bottom line. Looks a little different than when Tesla has a disaster, embarrassing, bad quarter, right? Look at these quarters. They barely eked out profits, $184 million in profit, $125 million in profit, $190 million in profit. Pretty fascinating, right? By the way, General Motors, I just want to point out, they did go bankrupt in 2009. That's a real disaster, horrible, embarrassing situation, right? If you want to look at Ford, what does Ford look like when they're going through disaster, bad times? Well, Ford in 2022 had one of those years. They lost $2.1 billion on their bottom line. 2020, they lost $1.2 billion on their bottom line. 2019, they only made $84 million on the bottom line. Jeez. 2014, they only made $1.2 billion on their bottom line for the full year. Not for a quarter, for the full year. So this is fascinating, right? This is fascinating to see what other auto manufacturers look like when they're going through tough times versus what Tesla looks like when it's going through horrible, tough times, right? I show you this. This is Ford stock back in the great financial crisis. The stock got down to 72 cents a share. 72 cents. It opened up in 2009 at $1.41. The 2009 low was 91 cents a share, folks. 91 cents for Ford Motor Company, right? And I wanted to show you guys some companies for reference, like Fubo is a $1 something stock, right? The Planet is a 64-cent stock. That's how bad it got for Ford, that their stock price was so far in the gulag. It's like where stocks like Fubo and Planet are super speculative, like penny stocks, right? That's insane. That's absolutely insane to think Ford Motor Company got down there. But that was a win for Ford because at least they didn't go bankrupt like GM, right? So very important to understand the difference between Tesla going through tough, disastrous times in the rest of these guys, okay? Now, check this out. This is important and matters significantly, okay? So first thing up here, look at this. Total production was down a whopping 2% year over year. 2%. This is the epic disaster that they're talking about? 2% down? Wow, right? Now, I thought this was very important right here, okay? 12%. Total end of quarter operating lease vehicle count was up 12%. And I'm going to show you why that's so important in just a moment. The other thing I think is important here is global vehicle inventory days of supply is at 28. Now that's extremely high for Tesla standards. Usually Tesla's at we can call it 15 or under. So that's high for Tesla, but that's insanely low if you compare them versus almost anybody else in the auto industry. Basically anybody else in the auto industry, they have significantly more days of supply out there than Tesla. But remember that lease number there, up 12% year over year, because this is crazy. Check this out. Model 3. You can now lease a Model 3 for $299 a month. A brand new Model 3 for $299 a month. That doesn't even take into account the gas savings, right? From not driving a gas car around and driving an EV instead. Incredible. Model Y, $368 a month. And the crazy thing is, I was like, well, maybe there's a big down payment. No. Less than $3,000 down. What? Less than $3,000 down for the Model Y as well. That's insane. That's literally nothing. If you know anything about leasing vehicles, that's nothing. This is insane. Look at this. You can get a long-range all-wheel drive Model Y for $419 a month. $419 a month. Now, if you take into account what your savings will be, what Tesla estimates in electricity versus gas costs, right? Check this out. You're really paying $268 a month for a brand new Model Y or $319 a month for a long-range Model Y, right? Model 3 and Model Y are a no-brainer, whether you're talking about to buy or to lease. If you're buying it, it's a no-brainer. The cost is so cheap right now. But if you're looking to lease and you're like, I don't really want to own it, I just want to lease it for the next 3 years. Oh my gosh, I don't even, if somebody leased another vehicle over these two, it just wouldn't even make sense. If you're going to lease another SUV or another car over a Model 3 or Model Y, you must really hate Tesla. because that just doesn't make anything sense at all, because you're getting a far superior product. Like, that's crazy, 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 right? Now, this is very important here. This shows you FSD version 12, how many miles have been driven. It's going up rapidly right now. Now, also this shows you Tesla's AI training capacity has increased dramatically, right? And all these things end up mattering significantly to the progress that's being made on FSD right now for the robo-taxi fleet, for these cars to drive themselves without any human intervention at a much better scale, right? Non-automotive gross margins, I thought this was extremely important, right? Everybody wants to talk about production being down 2%, or deliveries being down 2%. What about or production, right? Non-automotive gross profit up significantly on a year-over-year basis, from about $300 million in the same quarter last year to approaching $500 million in this most recent quarter. That's pretty darn impressive there. There's a lot of people that went into this earnings saying, oh, Tesla's going to crash. Just wait, after hours, it's going to be $120. It's going to be $60, $50, $80, $70. Oh my gosh, throw it all over your price target. Listen, okay, stay focused. Stay focused on the long term. When you own great companies that you're happy to be in over the next 5, 10, 15 years, don't try to get in, get out. If you want to do a little hedging, buy some puts. Buy a small amount of puts on the position if you're really scared it's going to crash or go down. You don't have to sell your entire position. You don't have to sell half your position, a quarter of your position, anything like that. If you like the company for the next 5, 10 years, do that. If you feel like it's way overvalued and the company's not going to go up anytime soon for the coming years, I understand taking profits. But in a time period like now, Tesla's already gone through all their BS. Do you really want to dump out of Tesla now because it might go down another 10%, 20%? I don't know about that, right? And part of me really wants the stock to be lower. And the reason is I'm a buyer of Tesla stock right now, so I want to buy more shares for as cheap as possible, right? So it's a selfish wanting the stock lower. But on the flip side, I kind of want it to go higher. And the reason I kind of want it to go higher is I want it to teach a lot of people lessons. A lot of people that think they can time these things out and get out of these stocks and in these stocks, and I want to be taught a little lesson. And so I went into these earnings feeling like I don't really care what happens, but I'll be happy with either scenario. Stock goes lower, I'll bid to buy shares for cheaper. Stock goes higher, some people can learn some lessons in regards to trying to think you can time out and get in and out of these stocks like a Tesla, right? And I also do like it whenever Elon can kind of stick it to the bears and show that you shouldn't really bet against them, okay? All right, guys, big day for me tomorrow. Maybe some of you guys out there, Meta live stream tomorrow on Twitch. It's going to be a beast. Sheesh, what a day, what a day. Much love, folks. Hope you enjoyed this, and have a great day.